Welcome back, guys. Thank you to our new subscribers. Thank you to all our supporters. You've been great. We've only been doing it a few weeks. Thank you so much for all your support. We're going to do step 3 today. We've been talking about our crypto bear market strategy, and in step 1 we had how to research the project. We talk about how to actually go through and research the project in different ways and how you can do that. Go back and watch that. How to apply good risk management, and we go through different risk management strategies, how not to put your eggs all in one basket, how to diversify. The application of good risk management is, in my opinion, more important than the actual trading side of it. So go back and watch how to research a project if you haven't done so already. If you have watched the 2 of them, this one's how to use Tradingview, how to apply structure, support and resistance, and we're going to go over a couple of indicators to tell you whether the market's overbought or oversold. So it's a beginner's strategy. It's not beginner's strategy, it's a beginner's tutorial on Tradingview, and at the top you'll see the front end that looks like this, and you'll see the chart, the markets, the news, the screeners, the community, and different features and more. We're just going to click on the chart. That's what we're interested in. And when you first got on Tradingview, if you haven't been on here, you'll probably come up with Apple, and you can change the symbol by just going on to symbol search at the top left hand corner, and in this instance we're going to be looking at Bitcoin, but you've got different options here and it's dependent on what's more familiar to you. You've got all stocks, futures, forex, crypto, index, bond and economy. So we're looking at crypto. This is a crypto bear market strategy. We're looking at Bitcoin on the Binance chart, trading against the USDT. So firstly I'll say that you've got on the right hand side here, I'm using the free version just to show you guys, so you'll probably notice ads and stuff like that in this one. You can log in and use a free account, and I think you get additional features for doing so. I've got my own account which I'm not logged into at the moment, but you've got options on a watch list. So what you can do is anything you're invested in, anything that you're looking at, anything that you might be trading, anything that, different options for different things. You might have small cap, low cap, medium cap, different splits in the portfolio. It's very useful to split your watch list up, and that's what it's for. So you can just add your tokens in that. On the left hand side you'll see a toolbar, and I'm not going to go through everything, but you've got things like a trend line, which is just if you're just drawing a trend of some sort. You've got a horizontal ray, and what you can do is you can just click this yellow button at the end here, and it'll add it to the favorites. And what that does is it just takes it down and it adds it on a favorites toolbar down the bottom here. You've got your Fibonacci tools, your fib retracement, your fib extension, your GAN levels, all sorts of different Fibonacci based and GAN based tools there. You've got your drawing tools, so you've got your paintbrush, highlighter, you've got your rectangle. That's quite an important one, and we've highlighted that for this tutorial here, and you'll see that down in the toolbar, the rectangle. You've got your text box, you've got A, B, C, D, E patterns in the patterns menu, along with head and shoulders patterns and other different variations. Prediction and measurement tools. You've got your measurement ruler here, so you can just see how much the market dropped, 73% there in that instance after the bear market, the initial drop of the bear market in 2018. Your magnet tool, so if you wanted to show you an example, just click the magnet on. So you click the magnet on and you get sticking points where it snaps on. Turn that off. That's to keep on drawing tools, but I'm not going to show you too much. You can go and have a little play with that, guys. You've got your indicators as well, so a couple of indicators that we'll look at. You've got your relative strength index, your RSI. And what I like to do is just go into the settings, and this is just me personally, you might have your own preferences. take off the Bollinger and the RSI based moving average on mine personally, and then just change the colour to something a little bit more visible, like yellow or white. Change the thickness. And what I like to do as well is, depending on whether it's trading or whether it's investment, if it's investment I'm quite happy to have it on the 14 RSI. On the trading I like to have it on the 7, it's a little bit more aggressive and relative to recent price action, which you tend to do when you are trading. So standard's 14 and that's fine. Right, so you've got your relative strength index down here, and what it does, there's a couple of things that's good with this. You can look at things like divergences, and certain things like a bullish divergence, where you might have, for example, price action making a low, RSI making a high, which would indicate a bullish divergence. So that's one good thing that you can look for on the RSI is divergences, and they're quite accurate as well. They do tend to play out, but it's just when do they play out, and it's the tricky one sometimes. So what you're looking at here is levels of overbought and oversold, and the RSI is indicated by the 30 as standard for overbought, for oversold, and 70 for overbought. You see these levels here, your market's overbought, and that's these levels here. So crash, RSI was telling us the market was overbought, and then we come back up and we're coming back to the oversold level. Price action's gone, and then you've got a longer term divergence there where your price action's made a high, but the RSI hasn't made a higher high, it's made a lower high. So that was indicating weakness in the market, and that's just another thing. But what I want to show you guys anyway, I'll show you another quick oscillator, which is the Stochastic RSI, which is a bit more of a simpler version. And here you just got oversold levels, oversold, oversold, overbought. This was telling us that there's weakness in the market, overbought, weakness, we're coming to an end. It's actually, so this is actually overbought. If you look here, so this is why the stochastic's not always accurate, and when it's right at the top you shouldn't just come out of everything, because if you, just as this example here, you come out of everything in the overbought weekly stochastic RSI, you've dropped from 16,000 to 40,000, and you have your dip, RSI is reset and the stochastic's resetting, and you've come all the way from 65 down to 30. So the RSI in itself is not something that you should use to trade with. It's a good thing to tell you whether the market's overbought or oversold at any certain time, and you should use it in confluence with other indicators, with actual price action candles, what the markets are telling us. And the main thing for me is levels of support and resistance. So if we're at a level of resistance, or we're at an all-time high and the market's given, or the stochastic's given a top, then we should be observing and looking at areas where, if the market doesn't hold, what's likely to happen next. So I mean, just this trend line here, broke this trend line, come back, retested it, didn't manage to break through, and that's indicated weakness in the market. The indicators are telling us everything's oversold and the market goes down. So we're just looking for clues, and we're just adding weight to any of our ideas, any of our investments, any of our trading strategies. And what I want to show you guys now is how I apply, or how we apply in this channel, levels of support and resistance. So you've got the weekly time frame. So you just click on up here, and you've got different areas here. You can go on the 1 hour, 4 hour, daily, weekly, monthly. We're going to go on the weekly, and what I'm going to do is we're going to change the candles to lines, and we're going to look for sticking points in the market, and we're just going to add some sticking points in the market. And you see this reaction here, reaction here. These levels are quite important. We'll go back to them in a minute. You've got the 2018 all-time high, January 2018 all-time high. You've got December 2017, beg your pardon. You've got level here, acted as support, come back down, slam through, resistance at a later date. That's a sticking point. You've come back here, resistance, resistance, broke through, come back, and it's slightly tested. It's hard to see there. It's confirmation of support, and then we've made our way back up, and then we've got the start of the run. So that's a level we're looking at. On there, you look at just how many sticking points. One, reaction, reaction. You've got a reaction there, resistance, come back through. Didn't get a test as support. It's just slammed back through, and it's an area that we'll be looking at a later date. You've got one, level there, so support and resistance, reaction. We'll stick the moving average on there as well. I'll just show you how to do that. Go to indicated, moving average. And if you just got the settings up here, you've got MA, moving average, 200. That's what we're looking for. We're changing that a little bit of a nicer colour, white, so we can see it, make the thickness bigger. And what I want you guys to do, if you haven't used Tradingview before, just go on there, open a free account, or you don't even have to, you can just go to the website and do it. But add in some support lines and resistance to some of your investments, and tell me if the areas that you bought were a good area. And also leave in the comments as well, if you don't think that it was a good area, what would have been a good area, and why would it have been a good area? Would it have been a good area because you've bought at a level of support, a strong level of support, at a level quite far below the all-time high? Would that have been a good area for you? Would it have been a good area if it hit the 200 moving average? What areas are you looking at for investments, and are you applying good risk management? So I just want to say that it's not financial advice. None of this is financial advice. It's something that we're doing on the channel, and we just want to apply sensible risk management, and we want to show you guys how to do your own research and apply your own risk management, because ultimately if you do that, then you've got a more chance of a success. So what we're doing is, I'm going to go over more detail in the next episode, but what we're looking at doing is incrementally buy at levels of structure at 50% below the all-time high. So like I said, go back and watch the first two videos if you haven't watched this one already, and you'll be able to see how to do that. But the next episode we'll be going through a lot more detail as to the areas that's good to buy once you've done your research, and how you can apply good risk management to those levels, and how you can prepare yourself if you make a decision that decision might not have been the right one and it's gone straight through. So there's certain things price action can tell us as to whether that level is going to hold or not, and we can look at those levels. We can look at additional confluence to find out whether there's indicators telling us that the market's oversold in those areas and we're likely to get a reaction, what the news is like on a macro scale. We can look at all sorts of different things to find out whether we can get them even cheaper. So it's if we're expecting a 2-year bear market, split your buying power, your dry powder, into 2 years worth of buying, because if you're in it for the long haul and you're in a bear market, price action is likely to go down, and all you want to do is bring your average down and take advantage of those levels. So that's the important thing. I hope you like the tutorial on Tradingview. Like I say, sorry it's only a very basic one, but go through and have a little play with it, and if you are invested, it's good to see what levels you can be invested in. go back to the candle chart, and I'll just tell you quickly with Bitcoin, it's quite an important level that we need to hold here, which was signalled by the June 2021 low. And I don't want to see a candle close below this level, because I think we're likely to come back and either test the 20,000 range or the 200 weekly moving average. So that's a level that I'm watching, and I'm hoping that we do hold that. If we don't, we can take advantage of these levels here, because our strategy tells us that we've got a percentage that's always in cash. I hope you like this episode, guys. Episode 4 will be coming out soon. Leave a comment, go back and watch our other videos. We've got that NFT giveaway, a few videos. Go back on the Solana one, go back and watch that, and if you leave a comment in, once we hit 30 comments on that, we'll be giving away an NFT. Alright, thanks guys, enjoy your day, bye now.